The marketplace knows our expertise in this area, and that's what they are giving to us. The deal I just mentioned, the $26 million deal, is an off-market deal that came from a cup of coffee, a 8:30 a.m. cup of coffee. And the philosophy behind real estate is because of leverage. In life, the word I would like your audience to take away from my story today is leverage. A 29.97% average annual return is not typical in this space. Usually when we project or when we buy a deal, we're projecting between 15 to 18% average annual return. Now that deal that we did, we bought it for $12.55 million in April of 2021. And then we did what's called value add.
Hi, I'm George Pino, the CEO of Commercial Brokers International. Today, I got a fantastic guest for us. He's Tenny Tolofari of XSITE Capital. He's one of the co-founders there, and the team hosts a rapidly growing multifamily investment platform for a lot of healthcare professionals, which is very interesting to target that. And I think that's a great idea to do that as well. And but they provide resources to add value for the individuals interested in growing their wealth and really changing the financial future long-term down the road. And I think Tenny can really speak to this for a couple of reasons. Number one, he, I believe, is a testament to the American dream that you can build anything here. He's an immigrant and has really been extremely successful in multiple fields. But also he started not off in real estate, but actually as a cybersecurity professional. So I know a lot of you listeners out there and watchers have always asked, one of the most common questions I get, and I'm going to ask this of you, Tenny, as well, so that they can hear this, is that, how do I get started in investing in commercial real estate? I have a job right now. I'm spending all this time doing that. I don't have a lot of bandwidth to necessarily study the markets and figure out what's going on. What's a good way for me to get started in investing? How did you get started, and kind of what your path was there?
Thank you so much, George, for having me. And I'm very delighted to be here. And at the end of this conversation, I'm hoping the audience is going to take one or two things away from my story and the journey that I've been on so far for the last several years. So look forward to having this conversation.
Yep, I'm looking forward to it as well. So when you first came to the United States, and that was only in 2010, so really 15 years ago.
That is correct.
And since then, you've amassed a portfolio that you're managing a couple $100 million, I believe, or
That's
so
correct.
overall. And by any measure, people would consider that successful. And now, when you first came to the U.S., though, you probably weren't thinking about real estate, were you?
At all. It
At
wasn't
all.
even, I didn't even, I don't even know what it is.
Yeah. Yeah. So what brought you to real estate?
So, like you said, I came to the US in 2010 and I went to school, graduated with my graduate degree program from Bowie State University, Maryland. I studied management information systems where I focused on cybersecurity. Graduated in 2012, got hired into the corporate world, worked with for a bunch of the Fortune 500 companies like Deloitte, Boeing. And I did cybersecurity in my career. And along the line, I started thinking about this entrepreneurial stuff, where everybody say you got to become an entrepreneur. That's how you become financially free. Blah 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 blah. I was like, this sounds interesting. As an immigrant, somebody that have the quest for more, I was like, well, I need to look at what I need to do from an entrepreneur standpoint to be able to be financially free. Along that path, I came into across a mentor that said, Tenny, you might want to get into financial services where you offer different financial solutions to folks. And in that process, you can build a business and then you become financially free. And I was like, yeah, that sounds really interesting. Maybe I should do that. So I started the financial services business while I was doing my 9 to 5 job. And in that process, I met one of my partners right now that is the co-founder of XSITE Capital. I actually went to sell him life insurance. And then we started having conversation and we saw that we had synergy. And after that, we built a relationship from that. And then we decided to go into real estate. And the philosophy behind real estate is because of leverage. In life, the word I would like your audience to take away from my story today is leverage. You have to figure out what kind of leverage can you use to get to where you want to get to. Now, leverage, real estate is a vehicle that you can leverage to financial freedom. You can either go do it yourself, or you can look for somebody that's doing it and you leverage your time, energy, resources for them to help you get to where you want to get to.
Mhm.
So when I met Leslie, he was already in real estate. I didn't have no real estate at the time. The only real estate I had was my house. I had a house, me and my wife and my daughter at the time. Then I had just one kid. And I was like, well, this is the American dream. I have a nice job, I have a business, I have my house. What's next? So I was asking Leslie, okay, what can we do from a real estate investment perspective? And he's like, well, we need to go out there and buy single family homes. And as we were doing research, we came across multifamily real estate. And multifamily real estate is something that we've all lived in. But the question is intimidating in the sense that the amount of money you need to buy a commercial real estate is significantly higher than what you would need to buy a single family home. And that's where our challenge came from. We're like, okay, how do we do this? And the
Mhm.
key word, leverage, came into play. And what is leverage? Basically, how do we work with other group of investors that are looking for what we want, give them what we are looking for, and that way we will get for what we were looking for. In that sense, there are a lot of folks that in our community are high earning professionals, busy professionals making a lot of money. They all want to invest in real estate. They want the cash flow that come from real estate. They want the appreciation that come from real estate. They want the tax benefit that come from real estate, but not a lot of them have the time to do it. So we said, what if we can create a platform that can help busy professionals like us
Mhm.
achieve those benefits without having to do that work? So they're leveraging us as a platform at XSITE Capital to be able to do that. So when me and Leslie started, we were struggling. In the process of we succeeding or trying to succeed, we met our other partner, Dr. Julius Oni, who's an orthopedic surgeon. We were kind of just, trying to figure things out when we met him. And when he joined the company, and that's what made XSITE Capital blew up to what it's at today. So we have Dr. Julius Oni, who's our CEO. He's an orthopedic surgeon. Leslie Awason, who is the CRNA, and myself are the three co-founders of XSITE Capital. But basically, we found a platform to help busy professionals get what they want from real estate without having to do the work. And that's what we created here at XSITE Capital when it comes to real estate.
Okay. I love that you said a few things there. Number one, and the key point, leverage. I mean, you've mentioned leverage a few times here, but a lot of times when people hear about real estate or they hear about a business and they think about leverage, they think about loans. They think about, how am I going to get the loan? But what you're talking about is not so much leveraging that, but leveraging your assets, who you are, who you know, what you can do, leveraging your connections. And I think that's wonderful because that's ultimately, when it comes down to business, how you're going to maintain a long-term stability is by leveraging the professionalism of other people. How do I get into this business if I want to do this, but I don't have the time? And it's funny you say healthcare professionals because I actually work with quite a few doctors. Um,
Oh, okay.
and as smart as they are, a lot of them don't understand the real estate because that's not
At
their
all.
focus, and they don't have the time to invest into that, to study it and do it because that's not their business.
Absolutely.
And
Absolutely.
so, I worked, and it was interesting because actually my last client, one of my last doctors I was just working with, that we just closed a property on, he and his wife were buying single family properties and Airbnb-ing them.
Mm.
And both of them are doctors, and they all of a sudden realize we're spending too much time doing this. We can't grow anymore. I
Hmm.
our passive income is capped. What are we going to do here? So we ended up started working with them where they were selling them, and then my specialty being single tenant net lease investment sales takes a
Hmm.
lot less time and effort of management when it comes into it. So we reposition them. We're able to actually increase returns on about a 20% cash on cash,
Wow.
not 20% return cash on cash, 20% increase of what they were getting from their Airbnbs.
Okay.
So we're still able to increase the returns overall by 25%. However, now they had no management, no issues. They didn't have to get online and try and rent it out and work out this or hire somebody to do that and cut
Do
into.
that. Hmm.
So,
That's all leverage. That's basically what it is.
Absolutely,
Hmm.
absolutely, 100%. And so what we're talking about, and just for the listeners out there, is you created a platform. When you're talking about a platform, it's a platform for syndications, where The investors are essentially putting money in, potentially getting a preferential return at a certain point, and then once you hit certain return marks, you're also getting paid a little bit, perhaps a little bit more, because you're being rewarded for success.
That's correct.
Allows you to put a little bit less money in. Typically, a sponsor puts in 5 to 10% of the equity.
That's
Investor
correct.
will put in the balance of it. If you're getting debt on top of that, a sponsor can get into a property with, really 1, 2, 3% of what the actual equity of the property is, but they're using their expertise, to really reposition that property to get the benefit for all their investors.
That's
Um,
correct.
and I think that, you've been able to show that, and some of your returns have been, I think your average annualized return was about 29% across the
That's
board.
correct.
And I know you're targeting a little bit larger multifamily properties than what we would typically look at, with 100 plus units at a time.
That's correct.
Because that again is about leverage. It's going to take you just as much work to manage a 15 unit property as it is a 100 unit.
Yep.
As much time, cost, energy. So you might as well leverage your time and your money and get something bigger. What I'd like to know is kind of delve a little bit more into, I mean, that 29% is a pretty impressive number. I got to tell you, it's very impressive.
Thank you.
Impressive. I mean, we were seeing numbers like this back in 2007, 2006, 2008, but haven't really seen it in a lot of syndications since then. Most have been targeted and hitting in the mid to high teens. Now, are you seeing this primarily the biggest jump? Are you utilizing different tax strategies such as accelerated depreciation schedules or cost segregation analysis to boost up the cash flow? And but are you seeing it more in picking the right areas that are appreciating more rapidly than perhaps other areas, utilizing your specialized metrics? And I'm not going to sell your secret sauce of how you find properties. That's why people come to you. But are you seeing it more on the appreciation side? Because I mean, we've seen a lot of appreciation, and then going forward, how do you look at your investments now with this new economy and what we're seeing now? I know there's a
Yes.
lot of questions there, so
No, I'm going to break it down for whoever is listening for them to be very clear. A 29.97% average annual return is not typical in this space. Usually when we project or when we buy a deal, we're projecting between 15 to 18% average annual return. Now, that deal that we did, we bought it for 12.55 million in April of 2021. And then we did what's called value add. Value add is basically going in and doing interior and exterior renovation. After you're done with that, you increase rent on the property. A lot of times, I let people understand that people will exchange their money or their dollars with value. If the value is enough, the money they exchange for it becomes insignificant. What we do as part of our business plan is to find an asset that have an opportunity for we to add a significant amount of value from an interior perspective and an exterior perspective. The project that you're talking about is one of the projects we've done that we went in, we did exterior and interior value add. And in 21 months, a company came by and said, hey guys, are you guys willing to sell it? So we bought it for 12.55 million and we sold it for $17.8 million. So we were projecting 18% average annual return on that project, but we ended up delivering 29.97%. Cash on cash was projected to be 7, but we over delivered on that one. So if someone invested $100,000, they're making about 29.97 annually on that deal. Though we held it for 21 months, which is in 2020, December of 2022, which was like the height of the market where things was really, really hot. We sold it and we made a profit. Now, other deals that we've done, we've projected, a lot of them, we've not exited them yet. So we're still projecting that average of 15 to 18%. Now, if that time comes when we're trying to exit, our goal is to under promise and over deliver on that projected returns. So that is that situation. And that situation is a combination of cash flow, which is basically tenants pay rent, you pay your mortgage and expenses, whatever is left is the cash flow. The cash flow, that's what we give them, that 7% that we projected on that deal. And then when we sold it, we made a profit. When you combine the profit and the cash flow, that's what averages out to that 29.97% average annual return. And on that deal, we did cost segregation study, like you mentioned as well, where we're able to actually use bonus depreciation as well. That is not included in the return metrics that I just mentioned. So that's an addition to the returns that we projected on that particular asset.
All right, so that's fantastic. And I think just for our listeners here, when we talk about the um, leverage and things, I think number one, when you're the exit obviously on the sale price. Number one on the value add, I think you are spot on, and the fact that you were able to buy this property in 2021, exit out of it in 2022, says that you actually really did do. I mean, these were some interesting times. We had a lot
That's
of
correct.
crisis. 2022 is everything hitting in, going on. It was, especially at the end of 2022, even though it was a high volume transaction year, that's when things really start pulling back. So it's good to see that. And I think, for example, one of the things that you were talking about, we did something very similar. My business partner and I bought and we had syndicated this, a 292 unit apartment building many years ago in Dallas. And one of the interesting facts about this property was that it had absolutely no covered parking, which in Dallas, I mean, you still get hailstorms. You do get a lot of heat and hot weather in the summer months. People want their car covered. What was interesting is I then looked at it and I found out I went to a contractor and I contracted with them to custom build carports for us. Didn't want to put in 292 carports or 300 carports because if I had carports for everybody, I couldn't sell them. You can't sell parking if it's not
exactly. You have to be scarce
if everybody has the same thing. So I instead installed 100 carports. And that 100 carports, we literally sold them out at $30 a month each. About $360 in pure income because there's no expenses to manage a carport.
It's a fixed cost. Yeah, it's a fixed cost.
Fixed cost of $75,000 total for 100 carports.
Wow.
So, and that immediately increased the value of the property by, on a cap rate basis, 900,000, because I now had, 360 or roughly $36,000 additional income a year.
Yep. That automatically increased the value of the asset significantly based on the cap rate, like you mentioned. So that is that's powerful. Hey guys, anybody that's listening, when you're buying this large apartment building, every increase by $1 in rent or in income increases the value of the property by about 20. I think that's the math that they said. Increase about 20% by 20
on an average cap rate basis. Yep.
So the way it's valued, multifamily properties of value or commercial leases of value is based on the net operating income, which is the income the project is producing. If the property is not producing good income, then the project is not going to appreciate in value. So the goal is, how do I reduce expense or leave expense flat while I increase the income significantly? Absolutely. If you're able to do that, then you have a chance of actually increasing the value of your assets. And that's what we've done across our portfolio that we have so far.
And it can be as something as, and I make this sound simple, but it's really not, but it's something as simple as finding an older building that upgrading the systems are going to cut the cost. So you're putting in a certain amount of expense, and as long as the costs that your savings are less than, let's say it's 10%, then you're going to get a 10% increase overall on the cost expense. So, it's as simple as that, but it takes the eye of experience to understand where can I make those improvements to either increase my value for rental rates or decrease my cost by utilizing more efficient systems. And that could be something as simple as, hey, it's a chiller system. I'm going to switch it all to straight AC.
Right.
Which is much more efficient, and you have the costs.
You have the toilet system. You want to have efficient toilet system. So what we do when we're buying these assets, some of the things we do is we actually have a conversation with our property management team that knows the site, that knows the market very well, and we do a little feasibility study about what we can potentially do on this asset. So we do comparable analysis. We look at other properties around this asset that we're trying to acquire, and then we look at what they're actually doing and what they currently have, and see if the market will support our thesis about how we can increase the value of our assets. For example, if all the comparables don't have granite countertop, why do you want to go put granite countertop in the market? Because it's not a desirable amenities in the market. Now, if you test it and you see that the marketplace wants it, you can be the property that starts it. But usually when you start something, you have a little pushback before you start picking up, especially if the marketplace supports it. But there are certain things that market fundamentals already have that they want that you just have to deliver to them. And you do that and do that scale, you're going to make a lot of money.
Absolutely. Now, what's interesting is, there are a lot of investors that do this, and a lot of them use the same metrics. They're taking a look at it, and I said earlier, I'm not going to sell your secret sauce or mention it.
Oh no, it's fine. We don't have any secret sauce.
But,
I tell them, I'll tell them everything. We don't have no secret sauce.
But no, I'm of the same belief and mindset, because the way I look at it, it's not about the recipe, it's about the execution.
There's no secret sauce. I'll tell them everything, how we find the deals, everything.
Yep, I could probably talk a couple of Michelin star restaurateurs to give me a recipe, but if I tried to make it, it ain't gonna taste or look
exactly
like what they do. So, it's not just the recipe, it's also the execution. And I think that's where a lot of this plays into. Is there specific metrics that you may, speaking of secrets, or secret sauce, everyone knows the standardized metrics. You're looking at rent per square foot, price per square foot, price per unit, price per door, as far as bedroom counts, rental rate growth, demographics. Is there anything that you look at that may be an intangible metric or so that's, I always say when it comes to analyzing property, the math part is easy. It's the science, that's the easy part. However, analyzing properties is not just straight science. There's also an art form to it.
Right.
And the art form is where the most value is created by either the investor or the broker, because they see things differently than other people and they can see the value add. Is there anything like that may pop out to you, like on a deal or something like, ooh, it looks like an average deal, but because of this, it's an amazing deal?
Yes. Yeah, there are a couple of things, and there are a couple I can mention right now that we look for before we buy a deal. And it's as simple as, can we make money on these assets for our investors?
Yep.
It's as simple as that. Demand and supply. Do people want to live here, or people do not want to live here? There's no secret sauce. If people want to live here, good. If we buy this property, how much are people willing to pay for it? And then we'll test it and see if we look at the rent, let's say the rent is $1,000, are we able to push it to $1,200? And if we push it to $1,200, do we have a market that can support $1,200 in rent? Those other comparables, are they charging $1,200 in rent? That's it. There's a high demand, meaning people are moving to the area where we want. People want to rent apartment. There is economic growth. There are good schools. There are amenities around where people can actually use for living their lives. And there's an opportunity for we to add value to the property and make money. If that is check, we're buying it.
Yep. Okay. Now,
that's it.
I think one of the other things also that we haven't really touched on that I think is definitely part of your secret sauce, something that you said, and I'll say this first, actually, there's a developer in Los Angeles that was considered one of the top developers in the United States. And I happened to be in, I was able to go in for a meeting, and I was in his boardroom. And what was the most surprising thing in the boardroom, and I'm sitting there looking at it, is in 12-inch block letters, the metal, really nice, spent a lot of money putting this all together, were two words right across, probably 10 feet across the boardroom wall, and big block letters. It said relentless persistence. And he would tell his finders, you know what, if you come across a really good deal, you need to bring me in on it, because nobody's going to follow up better than I will. If it's a good deal, I'll make it happen. And that has proven over and over for him. That's worked well. And one of the things I noticed, one of your things that you've always said, tenacity. It's one of your core beliefs. I think tenacity and relentless persistence can probably be utilized interchangeably.
Right.
I mean, how important of a role do you see that? I mean, it's a really key part of, I think, one of what you had mentioned, even on your website. It's in a lot bigger print, a lot bigger. So, it's obviously important, but how important do you think it is?
It is extremely important. It's extremely important. And Les Brown, I'm sure everybody knows Les Brown. He said that he gave me this analogy when I started getting into personal development. I didn't meet him in person, and I was listening to his tapes and stuff. And he said, if you're sitting down in your living room, you turn on your favorite show, the one that you love, you got your popcorn and your drink, and you're sitting down, leg up, and you're just relaxing and watching your favorite movie. And these guys that sell cookies, they call them the scouts. What do you call them? These Girl Scout or Boy
Mm,
Scout.
yes.
Yes, that's the word I was looking at. The Boy Scout guys, they come to your door and they knock, boom, boom, boom. Do you know what you're going to do initially? You're going to ignore them. You're like, I'm watching my movie, man. Whoever is over there will leave. But if that person persists, continuously knock on that door, do you know what will happen? You get up that seat and you go straight to the door and you're going to ask, what do you want? And that little girl in the front door, they're usually ready because they know exactly what they want. And that is the thing that drives us at XSITE Capital.
Hmm.
Because we know what we want, no matter how much people tell us no, no matter how it is hard to raise capital, no matter how challenging the hill is going up, we just keep pushing until we get what we're looking for ourselves and our community.
Hmm.
Because there's no other option.
Yeah, I also like something that you've been saying, and I see it's been a trend along this conversation that we've had is what do you want? Keeping your, the way I'm hearing this and the way I'm translating it is, there's an old analogy or old saying in sports, keep your eye on the ball,
Ball,
right?
exactly.
Keep your eye on what's important on the ball. Don't lose focus by expanding outside the area. And I love that because I see this happen a lot with initial investors when they start, why are you doing this? Ultimately, a lot of initial investors don't necessarily have a plan. They're just, I want to make money.
Yep.
But ultimately, why are you doing this? And if it's an investment, it's to make money. And
Right.
I say this a lot to a lot of my investors and people I work with, is that what I see in real estate a lot of times, people buy, it's kind of a set it, forget it mentality. They
Right.
buy it, and although it's an investment, and usually one of the biggest investments that they have, they forget about it and it just comes in. What someone should be doing is analyzing that investment on an annual basis and determining whether that investment is performing as well as it should,
Right.
or if there's an alternative investment that's going to outperform it. Because
That one.
ultimately, we're not buying this to feel good about ourselves. We're buying this as an investment to make money. And if I can make money elsewhere with the same amount of risk or time and energy and effort, then I'm going to take that,
Uh,
opportunity. And I think it's keeping your eye on what the main goals are.
right.
What are you buying this for? And I, like I mentioned earlier, I see this happen with a lot of first-time investors where they start pontificating about, oh, I could do this, I could do this, I could do this with the property. Well, no, you know what? You're overthinking it. It's not that complicated. Keep your eye on the ball, keep your eye on your goals, and if you do that, you have a much higher success rate of actually achieving those goals.
Absolutely. Absolutely. I agree with you 1,000,000%. So we have $270 million of assets under management, and we just have another deal under contract, another $26 million deal under contract last week, Thursday. Once we close that deal, our asset under management is going to jump up to close to 130 or 130 something $million of assets under management. And then all this is in multifamily real estate. We've been approached with a whole lot of different things and a lot of different options. But when you say keep your eyes on the ball, the marketplace needs to know that XSITE Capital is focused on acquiring institutional grade multifamily real estate, and that's it.
Mhm.
There are a lot of other commercial properties that are out there. Talk about, senior living, assisted living, retail, office space, and all of
Industrial,
these things,
whatever it might be. Yep.
industrial. But hotels. But we're like, no, let's put our eyes on the ball. We're buying commercial real estates, but multifamily. And that's it. And that's what has actually helped build our success, where people knew that or knows now that our expertise is in this particular area. The marketplace knows our expertise in this area, and that's what they are giving to us. The deal I just mentioned, the $26 million deal, is an off-market deal that came from a cup of coffee, a 8:30 a.m. cup of coffee, because of the relationship, because they know that this is what XSITE Capital is all about and what they're looking for. So if you're clear with what you're looking for, when you speak it out to the universe and you speak it out to the marketplace, they understand, because that's the language that they understand that you're looking for.
Okay. So, I've really loved this conversation. I'm going to actually try and summarize it up in 3 words for you. And ultimately, I think this is a takeaway for anybody that's listening right now. For me, the 3 words that, from what I'm hearing from you, that really contributed to your success. Uh, Number one, focus. Because if you're not focused on something, you can't be the expert in that area and you won't know what you're really looking for.
That's correct.
Number two, from that focus, you got to be tenacious and work hard and keep going and moving forward. More importantly, lastly, leverage.
Leverage is
Leverage not
key.
just your assets as far as equity and money, but leverage your connections, leverage your knowledge, leverage what you have. Find people that are looking to do the same thing but don't have your assets, and leverage that for your benefit to actually grow and be able to expand and partner with everybody else. So, I mean, I
Absolutely.
think that's probably the 3 words I'd use: focus, tenacity, leverage. I hope you'd agree with that. And I do really appreciate your time here.
Absolutely. You nailed it. That's basically, tenacity is one of our core values, our company. And I think I exhibit that in the company a lot as well. So that's something that drives us every single day. And leverage, I wish I can spend the next 30 minutes, hour talking about leverage, because there's a different facet to it. So definitely you nailed it on the head. And of course, 100% focused on the goal. So you got
Yep,
it.
absolutely. And I again appreciate your time. I think we're gonna have a lot of value. If you have additional questions, if you're listening and you like what you heard, don't forget to hit that like button. If you haven't subscribed yet, don't forget to subscribe. And also, if you are looking to connect and get more information, you can either DM myself, and I'm also going to have Tenny's contact information right now below. You can click on it, or you know, just DM and I'll put you in contact directly as well. So thank you so much. This was a pleasure having you on, and really enjoyed the time with you, Tenny.